In a fresh blow to borrowers, the Bank of England is expected to raise its base rate of interest again today as it attempts to bring inflation under control. It would be the 14th rise in a row and could take the rate to a 15-year high. Our business correspondent, Gurpreet Narwan, joins me now. And Gurpreet, this is going to be hard listening for anyone who might be thinking of moving their mortgage anytime soon.
Absolutely. And we're going to find out at lunchtime exactly what the Bank of England decides to do. But we believe it's poised to raise interest rates once again. The question, of course, is how aggressively it chooses to act. Economists are penciling in 0.25 percentage point increase, which would take the base rate to 5.25%. And as you can see here, it would mark the 14th consecutive rate rise since December 2021, when the Bank of England first started raising interest rates in order to get a grip of inflation. But of course, we can't rule out a much bigger increase to 5.5% just yet. And really, it's a judgment call, because although inflation is coming down, the headline rate of inflation fell to 7.9% last month, fell faster than expected. It's still almost 4 times the Bank of England's 2% target. So we've got some work to do to get it back down. And if you look at the red line, that's a measure of core inflation. It's underlying price pressures in the economy. It's something that central bankers keep a really close eye on. That is not falling anywhere near as fast enough as the Bank of England would like. So it's not going to want to send out a signal that it's being complacent. We can't rule out a much bigger rise to 5.5% just yet. And whatever the bank decides to do, whether it's 0.25 percentage point increase or 0.5 percentage point increase, any increase will feed through into the mortgage market pretty quickly. As you just said, anyone on a variable mortgage or a tracker mortgage will see their monthly payments increase almost immediately. Those on fixed rate mortgages do have some respite. Most lenders will have already priced in these expected increases into their products, but that doesn't mean anyone rolling off a fixed rate mortgage after several years of record low interest rates isn't going to see a steep rise in the amount that they're paying each month.